If you pay for home insurance or motor insurance of any kind, then this video is going to be very interesting for you. Because many of you will realize that when your insurance renews year on year, somehow the price increases very slightly. And some of you will have noticed that if you inquire as a new customer with the same firm, you might get a cheaper price. That's because many firms are increasing prices year on year for existing customers as against those for a new customer. I've noticed this a few times, not just with insurance, but with various other contracts, and I find it a little bit unfair. But this practice is known as price walking. That means that they increase the price year on year for existing customers, meaning that if you want the very best price, you need to shop around and switch every year to avoid paying higher prices just because you are loyal to the same company. However, the point of this video is that all that is going to change because the Financial Conduct Authority, the FCA, which regulates all kinds of insurance and financial products, has implemented a new package of remedies to improve the competition and to protect customers who purchase home insurance and car insurance against such loyalty penalties such as the one I've described. The new FCA rules are going to stop firms from running such practices as price walking and charging existing and loyal customers more when their insurance policies renew by requiring that insurers offer renewing customers a price which is no higher than they would pay as a new customer. The obvious knock-on effect on this, however, is that prices might go up across the board, including existing and new customers. But of course, the obvious reason for it has been to lower the prices for new customers to bring in new business, but they pay for that by charging existing customers a higher rate, forcing everybody to shop around and causing market distortion with prices across the board. At least that's sort of the way the FCA puts it. In addition to stamping out this practice, the FCA is also bringing extra new rules, such as giving customers easier methods of cancelling an automatic renewal of policy, something which I know many of you have asked about in the comments. What do you do about a renewed policy? Which in most cases will depend on the terms and whether it's an extension of the contract and whether or not there's a cooling off period and how easy it is to cancel such a renewed policy. And in some cases, as I have done in the past, I have told companies expressly, do not renew this policy at the expiry of this 1-year term. And guess what? They went on and renewed it, at which point I contacted them and I sent them a transcript of the chat confirming that I didn't want this contract to renew at the end of the term, and ultimately they cancelled it and I had to go elsewhere. But these new measures are going to give consumers easier ways of cancelling automatically renewed policies. In addition, the FCA is going to require that insurance firms do more to consider how they offer fair value to customers and how they require home and motor insurance firms to report data to the FCA so that all of this can be marketed more effectively. And just as a sweeping caveat, I know that I say car insurance, it obviously means motor insurance across any type of motor, not just cars. If you're interested to read it in any more detail, I'll put a link in the description below to the press release from the FCA, which does refer to some reporting on pricing and auto renewal, etc. And of course that the FCA is going to continue to monitor the market closely to ensure firms are ready to implement all of these changes in good time. So I hope you found that interesting. Please like the video and subscribe. That always helps my channel grow. And as always, thank you for watching.